live here on this Memorial Day holiday weekend. It is Friday, 11 a.m. on May 23rd. I keep having to look at that date there. And Chris, you can hear me okay before I get started?
Good to go. Yes, sir.
Perfect. Well, my name is Rob Ross here with the Ross Group at Intercoastal Mortgage. And I've added my partner and right hand and left hand and partner of many years, Chris Carney and Alec Gagne, to the bridge loan conversation here today. And we've got several people jumping on here. We always set these webinars for about an hour. I can tell you this one today is probably going to be about 30 minutes. So we're going to give you a little time back today. But in my opinion, this is the most important realtor training we're going to do of the year, simply because we do so many bridge loans. And not just the fact that we as a lending team do so many bridge loans, it's more of the fact that so many real estate agents and clients need bridge loans. They just don't know what they are. And it's, you don't know what you don't know. So they don't even know that they need them, right? They don't even know that they exist. They don't know how they work. Well, that's what we're going to do today. Is we are going to go through a very quick webinar today, explaining how bridge loans work. And in addition to that, we're going to have a few live examples, real life examples, I should say, that Chris and Alec both have kind of gone through recently, and they will chime in on some different places here. So Chris, Alec, feel free to stop me and jump in whenever. Feel free to add to the conversation whenever. And if you think it's a good spot for those stories, raise your hand and I'll, I'm staring at the screen here. We'll get you going. So again, happy Friday to everybody. I hope you have a great Memorial holiday planned. And without further ado, we will kick this off. We are live on Facebook. We are live on YouTube, X, and Instagram. For some reason, LinkedIn kicked us off today. I don't know what's going on there. So let's kick this off here. This is going to be revised. We can no longer do California, but everything else on here is valid. We have chosen not to do California. Let me make that clear. But everything else on here is valid. So we're licensed in 23 states nationwide, and we can pretty much help you out in any of these states with a bridge loan as well. There is an exception outside of kind of the DC area with bridge loans, but we've gotten pretty much 100% of those exceptions done. So don't hesitate to ask us about bridge loans if it's any of these other states as well. We will jump in here. As mentioned earlier, my name is Rob Ross, Executive Vice President over here at Intercoastal Mortgage, coming up on my 25th year of doing this thing called mortgage lending. Chris Carney, why don't you say a little something about yourself?
Hey, everybody. Chris Carney. I have been with the Ross Group now for 11 years and expert in the bridge loan. So we're really excited for this. Something to note on this product. This is, before we dive into, to all the details, this is quite literally a game changer. This is how certain realtors that we work with have won deals, gained more deals, gained more clients. So this is your magic wand. This isn't just some other loan program. Like, this is huge. We're really excited to share all the details with you all today. And thanks for tuning in and listening. Make sure you tell a realtor in your office about it too, because this is a huge difference maker.
Absolutely. Up next, Alec Gagne.
Yeah, perfect. Happy Memorial Day weekend, everyone. Hopefully this weather warms up a bit. But my name is Alec Gagne. I'm a senior loan officer with Rob Ross and Chris Carney, my two handsome business partners. And I've been doing this, I think, coming up on my 8th year, maybe a little bit longer if you consider my internship when I was kind of plucked out of college. But it's like dog years. You might as well be 53 years old, right, in mortgage terms. But just to echo what Chris said, this is by far this is my favorite product that we offer at Intercoastal. And there's not a lot of lenders. There's no lenders that do it the way we do it. And there's very few lenders that do bridge loans in general. And we'll get into how we do it differently. But I mean, we're closing multiple bridge loans a month, and it is literally allowing clients to accomplish goals that they never thought they could. And two, and Rob will touch on this as we go through it. We're going to show how it allows you as a listing agent to get a home ready to sell and not have your back against the wall in terms of urgency. So it's a very convenient product for that. and we'll get into that a little bit, but we're really happy to have you guys.
Yep, perfect. And then Claire Fleming is our transaction manager. She's been with me going on 12 years, and she is not on this because she's getting these bridge loans to closing right now. So that's what she's doing. So let's kick this off. I'm going to go through the presentation here. For those of you watching, please post comments. If you have any questions whatsoever, go ahead and type those in the chat to the right. We will monitor that and make sure we answer those questions accordingly. Let's start with something very simple. What is a bridge loan? And I am going to read this, but a bridge loan provides a temporary financing solution when your cash is tied up in your current home. That's the basic definition of a bridge loan. You have cash tied up in your current home. It's helping you access those funds before selling the home. So a lot of folks that want to buy a new home, a lot of people don't have thousands of dollars in checking and savings, or they don't want to touch their retirement. So a lot of funds and a lot of money is tied up in their existing home. This is also valuable for buyers that cannot qualify for a new home before selling their existing home. And we're going to explain that a few slides from now. And it's basically debt to income ratio is what it's called. So we can touch on that later. It's how you qualify for a mortgage is based on your debt to income ratio. Okay. So bridge loans, the way we do them, can involve a 1, a 2, or even a 3-part closing. So yes, there are scenarios where a client needs 1 closing for a bridge loan. There are scenarios where they need 2 closings for a bridge loan. And there are scenarios where they need, 3 closings for a bridge loan. And guess what? You might be thinking, ooh, that sounds, why would they want 3 closings? That doesn't sound good. Guess what? It's not that they want 3 closings. They need 3 closings. And guess what? They're happy they have those 3 closings because it's allowing them to accomplish what we're about to teach you. And again, agents, this is your secret weapon. This is your secret weapon as a listing agent. This is your secret weapon as a buyer's agent. We're going to explain why. These loans they function as short-term equity lines, if you will, for 6 months. If you need past 6 months, we do 3-month extensions. So if you need to go past 6 months, we can give you a 3-month extension. If you need to go past that, we can give you another 3-month extension. If you're coming up on 1 year, we're probably going to have a conversation because after 25 years, I've never had a client go past 1 year. Okay. So you're not going to go past 1 year. You can see it in bold right here. The average bridge loan pays off in 42 days. That's right, 42 days. And we will continue to talk through this. Let's keep going through what is a bridge loan. How can this help you? We offer bridge loan solutions tailored to your financing needs. So there are really 2 main bridge loans we're going to talk about here today. It's the cash out bridge loan, and we call that closing number 1. You'll see that referenced in this presentation. And there is a purchase bridge loan, or we reference that as closing number 2. For the cash out bridge loan, we can finance in the guidelines up to 75%. The reason we have dash 80% there is we can often receive exceptions up to an 80% of your home's current market value. And that market value is going to be determined through an appraisal, just to answer that question in case it pops up. So we do our own research within the Zillows and the Redfins of the world and some of these tools out there that give you values on homes. So we're going to do our own research on the pre-approval on the front end. And we're going to ask the client, what do you think your home's worth? Most people know what their home's worth. But ultimately, we're going to verify that through an appraisal. The second option is called a purchase bridge loan. And that would be using a temporary bridge to actually buy or acquire your new property. And we'll explain why that might be needed. This is a seamless transition. If needed, we can convert that closing number 2 bridge loan, that purchase bridge loan, into a traditional, let's just say 30-year fixed mortgage at the end. Okay. So we can always convert that to whatever you want that loan amount to be. Maybe you want to bring some more money to closing after you've sold your home. Maybe you've sold your home for enough that the remaining equity pays off your second bridge loan and you don't want any mortgage at the end of the day. That would be called a 2-part bridge, right? So there's different scenarios here and it's not a one size fits all. That's for sure. So we gotta make sure the shoe fits, and that's our job as the Ross Group to help you do that. You don't have to sort. We're your team. You don't have to do this on your own. That's why you've hired the professionals. Bridge loan financing. Here's the biggest one. No need for a contingent sales contract. We'll leave it at that. I don't need to say much more there. Your equity is in the departing residence, and you want to use that for a down payment. Well, how do you do that if you don't have a home equity line? And we'll explain why you really can't use a home equity line. And I'm going to explain that in this next little bullet point here. Previously on the market or listed homes are okay. If you go to a credit union and say, I would like a home equity line of credit, well, they'll close you in 30 to 50 days. And one of the very first questions on the application is going to say, what are your intentions with your current home? And when you click, you intend to sell it, they are going to turn right around and hit that big red denied button or stamp, if you will. And they're going to say, nah, can't help you because we want you to at least keep your equity line open for 3 years or more before we approve your home equity line of credit. Well, that's where a bridge loan comes in. We do not want you to keep it open for 3 years or more. Remember, it's a 6-month loan, possibly up to a year with extensions. We want you to pay it off in that average of 42 days. We want you to pay it off as fast as possible, and so don't you. So payments on a bridge loan are interest only monthly. So it minimizes your monthly payment while you're carrying these potential multiple bridge loans until you get into your new home and sell your existing home. So we help you by keeping those payments at a minimum because they're interest only monthly payments. Currently, a bridge loan rate is 8.875 with a 1.5 origination fee. If you're listening and you're not asking the question, well, Rob, that rate seems high, because that's the question we get. It's my favorite question. Well, here's the answer to that. So let's answer that. Well, home equity line of credit's between 7 and 11%, probably 7.5% to 11.5%. That's where home equity lines of credit range right now. Well, this is on the lower end of that, right? This is under 9. It's a bridge loan. You don't have to keep it for 3 years. We're not going to deny you on this because your home's on the market. In fact, we encourage you to put your home on the market. And remember, clients that call to say, well, where's the rate? The next thing I always say is, and I literally say this, if you're a client on here or an agent, you've heard me say this. I always say, does it matter? And they're like, excuse me? What? No, what's the interest rate? And I'm like, I'll tell you what the rate is, but before I answer it, does it really matter? And they're like, well, what do you mean? And I'm like, how long are you going to have this loan? They're like, 30 days. I'm like, does it really matter then? This is a Band-Aid. This program can be a Band-Aid to get you from your old home to your new home. But I always do answer the question and say, hey, it's right around the price of a home equity line that you'd be getting anyways. You're not getting a 30-year fixed mortgage rate on a bridge loan. That doesn't exist, okay? And as Alec mentioned kind of in his opening, there's only a handful of lenders, really less than a handful of lenders that even offer bridge loans, and no one offers the structure we do with the guarantees that come with ours. There is a 1.5 charge. Home equity lines can come with between 1 point and 3 points. Hard money can become, if you used a hard money loan for this, that can come with 2 to 5 points, right? So there's point structures. That 1.5 is your convenience fee. That is what we call it. That is so you don't have to move twice. You don't have to hire storage units. Let's just say this one. You win the offer. Ding, ding, ding. That's the most important one. You actually win the home you want to make an offer on. That right there is your convenience fee, right? Payments on home equity lines do not include escrow for taxes and insurance. You will be billed for those every 6 months, as you would if you had no escrows. Your loan term, as we said, is up for 6 months, plenty of time to sell your departing residence. And we will teach you how, through a 3-part bridge example or a 2-part bridge example, that you're really obtaining 100% financing. So let's just say this. You're a listing agent. And if you're a listing agent on here watching on any of our outlets, you're a listing agent who receives a contingent offer. Well, let's just say this. You have a $1.5 million home in Loudoun County, Virginia. I chose Loudoun County because I live there. So made it simple. But you receive 5 offers on your listing for $1.5 million. Two of those offers are at full price with 90% jumbo financing. Pretty attractive. One of those is contingent on the sale of a current home. Not attractive. One of those offers is full price, but they have a 20-day finance contingency and appraisal kick out, and maybe they're asking for a 10K seller credit. So maybe that 4th offer there is not so good. And then there's our offer. We're giving a bridge loan with no contingencies. Well, Those bridge loans, I can tell you, come with more than 10% down payment. So I'm going to tell you in this example, that listing agent's calling us. They know the Ross Group, they know Intercoastal, they know our team, and they're accepting our offer, right? That's who's getting accepted during this process.
And as a reminder, Rob, in this scenario, how long would it take to close a bridge loan if it's competitive and we're in a multiple offer situation?
Yes. So competitive multiple offer situation, we can get a bridge loan to closing. I'm going to tell you somewhere between 10 to 20 days. Okay. Maybe a little bit faster if we need to. But the reason I'm saying 10 to 20 is there is a rescission period on closing number one, which is your cash out bridge loan. So we have to make sure that cash has seasoned for 3 days and lands in your account to where you can use it for the new one. So when we're doing a couple closings potentially, we might need, I'm making it sound like it's a long time. I make, 12 days, 13 days, which is still super fast. All traditional mortgage programs, we can close in 8, 9, 10 days. So a bridge loan takes a few more days. But here's the answer. We're still faster than anyone else, right? You won't lose a deal because we can't close quickly. That's not in our vocabulary. That doesn't happen. So we'll keep moving forward here. So let's take closing number one. This is what we call your cash back bridge loan. So if you're on here watching, listing agents, buyer's agents, whoever, clients, you're taking your current client as the buyer's agent, and you're going to list their home, or maybe it's getting ready to go on the market this weekend. And let's just use an easy example. They are selling for $1 million. That's the list price. And they owe $500,000. So they built up some nice equity. Well, we will lend them 75% of that million. So we'll lend them $750,000. If we get an exception, as you can see on the first line there, to an 80, we'll lend them $800,000. Okay, so let's say we lend them $800,000. We will pay off their existing mortgage of $500,000, and they will walk away with the equity after the bridge loan closing cost of, close to $300,000, right? Somewhere in that range, high sevens. So that's going to season for 3 days. Then that's going to hit their checking account or the settlement company. So there's their $300,000. That's their down payment for the new home. So that's closing number one. Okay. Let's say a few drawbacks of closing number one. There's not enough equity on the departing resident. Well, that sometimes can kill a deal. Okay. So when you have a client saying, I would like to do a bridge loan, let's make clear they do have to have some equity in their home. And if a client calls you and says, well, I have 20% equity in my home, that's not enough, okay? Because we can go to an 80. There's no equity if they have to have some decent equity in their home in order to be able to do a bridge loan, okay? Let's go back. The purchase loan on the new property is subject to investor guidelines with restrictions or debt to income ratios. Even with an interest-only payment, it might not be sufficient to carry both loans. So where we're different is we will do a purchase bridge loan. We'll also use a bridge loan to help acquire the property where we don't care what the debt to income ratio is. I don't care if it's 90%. I mentioned that at a seminar last week. I don't care if it's 90%. As long as you qualify for the end result being once you've moved into your new home, your existing home is now selling, and you're taking those remaining 25 or 20% proceeds and you can apply that to the new one. You can pay off your new home. You can refinance it into a 30-year fixed. There's many things that you can do. We're able to help with that. So let me keep clicking through here. Now you have what's called your cash back bridge loan, closing number one. So let's just go through this real quick here. And we have your house on the right, and we're going to tell you that property value is $600,000. Okay. So a $600,000 property value, and your existing lien is $320,000. That's the blue to the right there. Well, we are going to give you up to 75%. So we're going to use the lower end of this example, and we're going to give you a loan of $450,000. And what does that mean? Well, it means right there at the bottom, you have $130,000 in usable equity. Okay. So that is $130,000 in equity that you can now bring as a down payment for your next closing, which is we call the cross collateral or purchase bridge or closing number two. It's got 3 names: purchase bridge, closing number two. That's the next step here. And does someone want to jump in here and maybe give an example before I kind of read through some of this of what a two-part bridge closing would look like?
Perfect. Yeah, we just did one that closed last month. So basically, the two-part bridge loan is used for someone that can qualify carrying the debt of both homes at the same time. Right? Rob just kind of told you guys that magic wand moment. What makes our bridge loan process different from anything else that's out there? Well, we don't have to count the debt of both homes against them if we don't need to. And there's a scenario for that. Alec's going to give us a scenario about that in a little bit. But a two-part bridge loan can be used if the client can qualify carrying both homes. So we just worked with a guy. He was a salaried employee, IT sales, makes like $200K per year salary with essentially zero debts other than the current home that he wants to sell. So very squeaky clean, easy deal. He owned his current home. He wants to list it for sale, but the perfect place, and it was only a couple blocks away, the perfect place came on the market that he's been eyeing and dying to move into. So he took cash out of his current place using our bridge closing number one, our cash out bridge. The home was valued at $400K. He only owed $200. So through our bridge loan and the bridge formula that we talked about, he literally took out $100,000 in cash from that transaction. So he took that $100,000 in cash and brought it to the new purchase, which was almost enough to give him 20% down. He had a couple of accounts that he was willing to tap into, but he didn't have 20%. He didn't have the 20% down on his own unless we used the bridge loan scenario for his home that he's looking to sell. So we were able to do just a traditional conventional purchase. So this was two parts, right? Part number one, cash out bridge on his current home to take that $100,000 out. Closing number two was a conventional Fannie Mae, Freddie Mac traditional loan, 30-year fixed, and he was able to get a great rate. Now, we talked about this too with him, and he said, well, once I sell my old property, I pay off the bridge loan, and I'm still going to net, close to $70,000 or $80,000 after the bridge loan's paid off, commissions, closing costs, everything else is paid. So can I take that and apply it to my mortgage that I already will have on my new home? And you can. That's called a recast or a principal curtailment. So we made sure that this guy was in a loan that allowed for that and allowed him to pay down the loan without using a refinance. So he was able to save a ton of money in that scenario, get a great rate, and use two closings because he could qualify, even though it was only for a couple weeks, carrying the debt of both homes at the same time.
Yeah, perfect. Great example, right? I mean, where else is someone going to be able to have that happen, right? So as Chris mentioned, he kind of went through all this on the screen. Second purchase, first purchase is originated as the cash out bridge. The next one's the traditional bridge loan. And that's really how it all works out. When the departure residence sells, the traditional bridge loan's paid off and the proceeds are used for a second bridge loan, right? So it just really, there's no reason to read through much more of this one. It really tells you right here on the screen exactly kind of Chris's example. So let's go here. This is the purchase bridge loan closing. It's basically what he said, but this is a nice little breakdown. There's a new home sales price of $800,000, right? That's the price of the new home. The acquisition bridge loan will give $640,000 of that, so 80% of that. And then there's that $130,000. That's the cash out we took from the previous closing, that $130,000 in cash out equity from that. And then in this example, they were shy $30,000. So let's say there's a scenario where it doesn't work. But again, that previous example, we gave 75%. So this is where we just give an 80% exception. They would need no cash at closing on this one, right? So it would help facilitate that. So these are the scenarios where you don't need the cash for closing, and it helps really truthfully bridge that gap. So that is that. Now, before we get into this next slide, because again, we have a fairly quick presentation today, I'm going to have Alec Gagne jump in here and give his most recent example of a bridge loan, because we feel that examples are where you're really going to learn here.
Yeah, absolutely. And great explanation, Chris, on the two-part bridge. Funny enough, I am paying attention, but I know this product in and out. I'm actually working up a three-part bridge loan pre-approval that Chris and Rob are about to see go out. So they are very prevalent. We do them all the time. It is literally the most exciting product that I talk about nonstop with my referral partners, whether they're financial advisors, real estate agents, and whatever, right? It is literally, I call this product our silver bullet. So in a three-part bridge scenario, I currently have a client that is a little bit older. She's been in her house for some time. It's not owned free and clear. She's trying to move closer to her daughter, and we're going to do a three-part bridge loan in her scenario, and I'll tell you why. Number one, in this three-part bridge scenario, all we care about is the debt-to-income ratio on the third loan, right? So the third loan is your conversion to permanent financing. So in this scenario, client, we're taking money out of their current home. So closing number one, that's your cash out bridge loan. So in this scenario, we're taking that money out. We're taking that money and putting it to closing number two. So that is your bridge purchase. So we're giving her an 80% loan to value on that purchase. So it's closing number two. Remember, we're taking money from one, putting it to two. And then once their home sells, we're going to convert them to a permanent loan. So when their home sells, closing number one gets paid off through the sale of that home. So she's going to net the remaining 20% equity that we discounted the property by. Now, why this scenario absolutely matters for this client is because, again, we care about the DTI on the permanent loan. She has Social Security and a minor pension, so she can't essentially buy before selling. So on her permanent loan, once her home sells, her end loan is going to be around $100,000. So with her very small pension and Social Security income, the three-part bridge is a beautiful vehicle to accomplish her goals, because again, we're pulling the money out because she doesn't have it liquid. It's all in her home. And we're taking that and we're putting it towards the purchase. And then once her home sells, we're making her end loan. So closing number three, your conversion, her loan amount in that scenario is $100,000, right? And then her Social Security and her pension can support that. So the beautiful part about this product is that the flexibility is endless, right? There are one part, two part, three part. I'll touch on the one part real quick as well, because I know Chris touched on the two part. So we talked about two parts. We talked about three parts. Now here is one of my favorite scenarios and I honestly talk to all my agents about this. I'm like, any 55 and up communities that you have a listing in and you have an open house or a broker's open, please bring me. And why is because we're going to do a one-part bridge loan. I see this scenario all the time. So typically when these people are moving to a 55 and up community, they've been in their home for 30 years, right? And typically it's a Sears home they bought for $75,000. Now it's worth $1 million, right? So they have tons of equity in this place. But as a listing agent, you're never going to actually accept an offer that's contingent on the sale of their home. All of their money is tied up in the equity of their place. So when I'm talking with clients that come through a 55 and up community, it's that same scenario. Their house is worth $1 million. They're trying to buy for $700,000 in this 55 and up community. So we're going to do a one-part bridge loan. So we're just going to do the cash out portion, and we're going to take the equity out of their current home. So in that scenario, let's say their house is worth $1 million. They want to buy for $700,000. We're going to give them a loan amount for $750,000. Now in these scenarios, they could have zero income. We don't care, because they're not going to have a loan at the end of the day. They're literally paying cash for the home through the vehicle of a one-part cash out bridge loan. So they literally could have negative income. We don't care, because we know that their house is going to sell very quickly. They have tons of equity. So we're giving them the cash, and then they're just buying the house outright, right? That's best case scenario. So that's a one-part bridge loan. That is that example. Now, also, Rob may have touched on this earlier. You have to remember, in this area, if the home isn't selling in 30 to 45 days, I don't know, it's probably overpriced, to be honest. But with that being said, mortgages are paid in arrears, right? So let's say that we close a cash out bridge in June. Their first payment isn't due until August. I would say 70% of our clients, maybe even a higher statistic, don't even make a bridge loan payment because their house sells before the first payment's even due. So again, this is the silver bullet that I literally scream from the mountaintops to everyone. So that's kind of the 3-part and 1-part.
That's how it's different. Honestly, the 3-part bridge and the 1-part bridge, those are the scenarios we use the most. And those are the ones that we do differently than anybody else. That's the, how is your bridge loan different or better than any other option that's out there? That's how. So it's extremely powerful, and we're excited to help your next move up buyers or downsizers.
Yeah. And just to reiterate, what Chris is emphasizing is that there are other bridge loan lenders out there, very few of them, but they have to count all of the debt of all 3 or 2 parts against the client. In our scenario, we care about, what does it look like at the end of the day? Are they going to have a loan, or what does their conversion, their 3rd part look like? And their debt ratios are in accordance with Fannie and Freddie and FHA or whatever. That's all we care about. We don't count all 3 parts against them.
That's right. Any questions out there on these bridge loans? Remember, there's no question that we can't answer here. So don't see any. We've got a good amount of viewers on here, but not sure that we have any questions. Let's see here. So we will have a few more slides on here just to give you an idea and a reminder. We are here today to talk about the bridge loan, but we are a full service lender. We have portfolio products, all non-QM suites. Non-QM means non-qualified mortgage. So you're talking DSCR loans, bank statement loans for self-employed borrowers and so forth. Of course, construction and bridge loans. We do all your plain conventional FHA, VA, government deals, 2-1 seller buy downs, vacation homes. We can even do some bridge loans on some vacation homes. So remember that if you have a vacation home you're selling, we can potentially do a bridge loan on that as well. 203K renovation loans, they are back. We can handle some of those. Home equity lines, second trust, 5 to 9 unit. Yes, I said that. A conventional deal is 4 units. We can do a 5 to 9 unit property on a DSCR loan now. Non-mortgable condos, if you're dealing with that, something we can do. And there's that 8-day closings. And remember, 99% of our products offer a free float down. So 99 out of 100 loan programs we can do a free float down on your rate anytime between your ratification of contract and locking in your loan and your settlement. And that's actually one of our favorite phone calls, is to proactively call a client and say, congratulations, we've lowered your rate. So that's always a great call. With that being said, one last thing here, and I'm not going to read this to you. Our follow-up is exceptional. When you give us a referral 7 days a week, we're going to be on that referral. We're not just going to call them. We're going to email them. We're going to call them, and we're going to text them, and we're going to put them in our customized CRM that we developed as a team. This is not an out-of-the-box CRM, and we're going to follow up with them until we get in contact with the client. If we try 3, 4, 5 times over a 7-day period and they're not getting back to us, we're going to let you know as the real estate agent that gave us the referral that, hey, you might want to reach out to your client, check a pulse, because they're not returning the calls. But we take those referrals very seriously, and we very much appreciate those. So that is our follow-up system. And there's the handsome gentleman in ties at the end here. Chris has to sit down because he's 6'7", so it's just not fair. But any questions here before we end? We told you maybe around 30 minutes today. It's been 35 minutes, so we are here to help out.
Yeah, and just to emphasize one more thing, we've been talking about this a lot as well, is the most recent procedure that we've developed here at Intercoastal, and it's essentially a soft underwrite. So I just want to give a quick success story that I just recently had, where I had a client that was competing on a townhouse in Reston for $550,000. The buyer pool is humongous. It's a very hot area to buy in that kind of sales price range. And we're up against about 10 to 12 different offers. So in this scenario, I had the client actually about 2 weeks prior to him finding this house. We went through our soft underwrite program here, where we essentially get the client in front of an underwriter and we get a conditional commitment letter directly from the underwriter. So what's better than a pre-approval letter, a conditional commitment letter? So when I called this agent, the listing agent, I said, hey, and they knew who we are, of course. But when I called her, she said, hey, appreciate the endorsement. Client sounds great. I said, how about this? How about this? We are literally conditionally approved in a conditional commitment subject to finding a house. We've already been through underwriting. It's already stamped. We just need a property address. that's actually what won us the offer, because it wasn't just a pre-approval letter, because anyone can generate that. We actually went through the process of talking with an underwriter and getting their stamp on income, assets, employment, everything. We just needed a property address. So, and an appraisal, of course. But in that scenario, it was a huge win, because it's almost as good as cash at that point. So, yep, you're muted.
Let me get off mute there. We will, very good thought, Alec, and closing out here. We do have a list of everyone that registered. I will send an email out within about 10 minutes of this webinar to everyone that had registered, whether you were able to attend or not, with a very nice PDF that kind of explains a lot of what we did here today. And remember, and I say this, if you are a listing agent and you have, in my opinion, and probably your opinion, it's your fiduciary responsibility to do what's best for your seller. We understand that. So if you ever receive an offer on a listing and it is contingent on the sale of a home, I would hope that the very first thing you do to look out for your seller would be to call us over here at the Ross Group and say, hey, I attended your webinar. We know you're the bridge loan experts. I just received an offer contingent on the sale of a property. Can you take a look or talk to this client? Because it's amazing when you can go back to your seller and say, we received an offer contingent on the sale of a home, but we hooked them up with the Ross Group and they no longer need to make it contingent on the sale of their home. They can buy before selling. We are the team that can get that done. You look like a rock star as a listing agent in the process. So with that being said, I'm going to give my famous sign off here. We are the Ross Group at Intercoastal Mortgage, and we are always working together to serve you better. On behalf of myself, Chris, and Alec, we wish you a happy Memorial Day weekend. If the sun does come out, put some sunblock on, eat a few hot dogs, have a good weekend, and don't keep us a secret. Natalie, thanks for jumping on there. Did ask for our phone number. It is right there on the screen, 703-568-3749. Natalie's pointing out that it's wrong. 703-568.
Good catch, Natalie.
3749. Natalie,
someone's paying attention.
Natalie Fan is I'm a fan. And we see Natalie at least once a month down at Better Homes and Gardens. She's an amazing agent, and we appreciate her very much. Thank you for getting that. And I just dropped my actual phone number into the chat there. So much appreciated, Natalie. And have a good weekend, everyone. Take care.
Everybody.